This is a discussion for answer on question 4 from final examination December 2018. So from this question, you are given the following information. Financial statement for Shazwi Cekas Sdn Berhad during the year ended 30th September 2018. And the additional information are as follow. The average stock for the year is 25,600. And then number 2, the account receivable is valued at 34,000. And the requirement is A. Compute the following ratio for Shazwi Cekas Sdn Berhad. Number 1, current ratio. The formula for current ratio is current asset divided with current liability. So from the financial, the extract information of financial statement of Shazwi Cekas Sdn Berhad, current asset is equal to 94,000 ringgit. Whereby for current liability, the amount is 60,400 ringgit. So divide the current asset 94,000 ringgit with the current liability of 60,400 ringgit is equal to 1.56. And then for the second question, A2 quick ratio, the formula is quite similar to the current ratio, but we need to minus with the closing inventory and also prepaid expenses. In this question, the amount for closing inventory is not given, similar to the prepaid expenses. Okay, it's also not given in the question. So we just assume that the closing inventory is 26,000 ringgit and then the prepaid expenses is equal to 300 ringgit. This is closing inventory and prepaid expenses. You cannot find the information in the question. Yeah, therefore I just assume that amount is for closing inventory is 26,000 ringgit and for prepaid expenses is equal to 300 ringgit. And then you divide it with the total current liability. Current liability is given and the amount is 60,400 ringgit. So you divide the total current asset minus closing inventory minus with prepaid expenses with total current liability. So the amount will be 67,700 divided with 60,400 and the answer is 1.12. And for next is for inventory turnover ratio A3. The formula is cost of goods sold or cost of sale divided with average inventory. Cost of goods sold is given at 102,400 ringgit, and for average stock is also given in the additional information of 25,600 ringgit. Okay, and you divide the cost of sale with the average inventory, which is 102,400 divided with 25,600. The answer is 4 times. And for the A4, debtor collection period, also known as account receivable collection period, the formula is account receivable divided with credit sale or 365 days. The account receivable is equal to 34,000 at additional information 2. And then you divide with the credit sale. Credit sale from the question is equal to 165,000 ringgit. And then this credit sale need to be divided with 365 days, which is equivalent to 452. So 34,000 account receivable divided with 452 will give you the answer of 75 days. And then for number 5, net profit margin, the formula is net profit divided with net sale and then time the amount with 100%. Since the amount for net profit is not given, you need to calculate, okay? So to calculate the net profit, we can use this formula. Net sale minus cost of goods sold plus other income minus expenses. Net sale is equal to sale, okay, which is at 165,000. Okay, and then plus with 75,000, which is cash sale, 75,000. 165,000 is the credit sale. 75,000 is for the cash sale. Credit sale plus credit sale equal to total sale. And then return inward is not given. So we cannot get the net sale. So we just assume the total sale is equal to the net sale since return inward is not given. And then minus with cost of goods sold. Cost of goods sold is in the question at 102,400 ringgit. Other income is equivalent to 45,000 and then minus with expenses equal to 89,000 ringgit. And then this amount, okay, after you total the sale, okay, total sale is equal to 165,000 plus 75,000 minus the cost of goods sold, which is at 102,400 plus with other income at 45,000 minus with expenses 89,000 ringgit. You divide with the net sale. Since net sale is not there, okay, so we can use the total sale, which is equal to credit sale plus the cash sale, 165,000 ringgit plus 75,000 ringgit, and then you times it with 100%. So you will get the answer of 93,600 divide with 240,000 times with 100%. So the answer for net profit margin is 39%. And for the next question B, based on your answer above, explain on the business liquidity. So for liquidity ratio, it consists of current ratio and quick ratio. Therefore, you need to interpret both current ratio and quick ratio. Okay, for the current ratio, let's look again at your answer above. Current ratio is equal to 1.56. What does it mean? So it means that the business has 1 ringgit and 56 cents of current asset to pay its 1 ringgit of current liability. And for quick ratio, the answer again in your answer in A3 above, the quick ratio is A2 above, yeah. So A2, the answer is at A2. Quick ratio is equal to 1.12. So it means that the business has 1 ringgit and 12 cent quick assets to pay its 1 ringgit of current liabilities. Okay, for C, explain briefly the purpose of calculating the following type of ratio. Number 1, efficiency ratio, and number 2, profitability ratio. So the purpose of calculating the efficiency ratio is to measure the efficiency of a business in managing its asset to generate sales by either using inventory turnover ratio or average collection period. And for the purpose of profitability ratio is to measure the profitability of performance of a business during an accounting period by using gross profit margin and also net profit margin. So that's all for question 4 from December 2012.